So fixtures and fittings, they had been purchased by check. So that means it would have got reduced. So cash and bank, so 8,400 minus 3,000 we have to do. So 8,400 minus 3,000. So that is equal to 5,400. And then you add up all the other things. Okay. So 62,500 plus 36,100 plus 1,000 plus 5,400. So 105,000. So the total is 105,000. That's the total. Now let's add up. This is the total current assets. So now what is the total assets? So this one was the total non-current asset. This one was the total. This one was the total non-current assets. And this one was the total of current assets. Okay, this was the total. Now we have to find what is the total asset value. So which is equal to 62,500 plus 62,500 plus 105,000. That is 167,500. 167,500. Now let's find the total of capital and liabilities. So they should balance. Okay. So capital and liabilities section. Okay. So first one is capital. Okay. So the closing capital, the capital were 50,000 at 25,000. So let's write that capital for Aaria and Benul. It was 50,000 and 25,000. And then you have the current accounts ending balances we have to take. So the current account ending balances were 1850 and 550. Okay, so let's write that. This was solved in the previous question. So 550 were the ending balances of the current account. So you take the ending balances of capital account, ending balances of the current account. So now let's calculate the closing balance. Okay. Let's find the total of the capital and the total of the current accounts. 1850 plus 550, that is 2,400. So the total capital, okay, closing will be equal to the sum of these two, 75,000, okay, plus 2,400. So that is 77,400 400. That's the total capital. Then we have the non-current liabilities. So non-current liabilities are going to be, there is a bank loan, okay, which is a bank loan. So bank loan, 60,000, okay, but there is a condition that they would be repaid in 5 equal installments. So in the 5 equal installments. So what does that mean? So 60,000 divided by 5, that is equal to 60,000 divided by 5. That is equal to 12,000. So this year they would have paid, okay, by the end of the year they have to pay, okay, the 5% they have to be paid on 1st Jan each year starting 2025. So at the beginning of the year they would have paid, so the bank loan would have got reduced, okay. So from 60,000 minus 12,000, that it would have become 48,000. And then we have to include the current liabilities, okay. So the current liability would be the first bank loan itself that was paid, okay, the bank loan repayment, okay, that was paid this year, that would have become a current liability, okay. So 12,000 was paid, and then you have interest payment, bank loan interest payment. So let's write that, bank loan interest payments. Bank loan interest repayment, okay, which was still owed. So they had paid only 1000, they had paid only 1800. So they were supposed to pay 3000 per annum. So the difference is owed, okay. So 3000 minus 1800, okay, 3000 minus 3000 minus 1800, 1200. So um, so the 1200, it would have become other payable, okay, bank loan interest, that would have become other payables, owed expense, okay, owed expense becomes other payables. So one was the bank loan and we had one more owed expense. So let's see that. So this is 1200, and then here there was another owed expense of 900, electricity. So that would have become other payable. So these two would have become old, um, like other payables, okay. And we had trade payables also. So the trade payables was around 28,000. So let's write that also. 28,000. So we had bank loan which had become a current liability, okay, and then trade payables which was 28,000, and other payables were 1,200 and 1,900. So now let's add up these. So 12,000 plus 28,000 plus 1,200 plus 900, that is 42,100. So this total was 42,100. So it was added and you got 42,100. Now the total current liability was 48 and 42,100 was the uh, uh, non-current liability was this much. Current liabilities were this added up to this much. Now let's add up all the total liabilities, okay, total liabilities. So the total liabilities were 48,000, okay, plus 42,100. So that is equal to, so 48,000 plus 42,100. So that is 90,100. 90,100 plus 774. Okay, so this is 90,100. Then plus 77,400. So that's 167,500. So the total capital, okay, this total capital plus is going to be 167,500. So this is equal to, so we can see that the total assets should become equal to total capital and liability put together, okay. So this is equal to total capital and liability